What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over the top 3 stocks in the market right now that have the most potential for squeezes or are currently undergoing their squeezes. So, of course, we're going to be checking out the barchart.com highest implied volatility stocks, see what's trending. And the 3 stocks that we really want to look for is, of course, we have IRNT. This stock was up to $60 plus in the pre-market, but it tailored off a little bit when the market opened. But it's still up 20% on the day, and it is slightly down in the after hours, down 8%. But saying that the stock no longer is one of the top implied volatility stocks, it means it's a good idea to get into it. If you want to play call options, now would be a good time because remember, the higher the implied volatility, the higher the premiums are going to cost, the more inflated the price would be to buy call options. So if we take a look at the options chain, we can see a lot of call options here. Implied volatility is still pretty high, but it's not as high as it was before. So buying some call options, some short-term call options for this squeeze play. We do think that if IRNT stays above $45 by tomorrow expiration, September 17th, we do know that this stock will definitely have a nice gamma squeeze the following week because all the call options will be expiring in the money and a lot of the positions will have to cover their shares. So that is what's going to happen with this stock. So if you want to buy call options, it could be a good idea to buy it maybe a week or two out, give yourself a little bit of time and basically count on this stock having a nice gamma squeeze with all the call options expiring in the money. So anything like, it's hard to say, but if you want to play a really risky call option, something like $50 strike for 500 bucks could be a good strike. If you want to go higher up the prices for a nice risky lotto, of course you can. $60 strike is going to cost you only 400 bucks. So it's really nice for people with small accounts looking for a little bit of risk. But of course, don't play these stocks with any money you're not willing to lose because these are very risky. Next stock on our list is going to be bbig, which is a nice short squeeze stock. It is down a little bit the past week, but overall it's still looking pretty healthy on the price action. And a lot of people are still watching the stock. As you see, implied volatility is skyrocketing right now. So if we take a look at call options, implied volatility is pretty high. So this means that people are anticipating a really big move. But the best thing about the stock is a cheaper price stock, so it has a lot of potential for the upside. And the call options aren't going to be that expensive either, only 100 or so bucks. A $10 call option expiring next week is going to cost you $73, which could be a nice risky lottery ticket play. So that's what's going to be happening with bbig. And the last stock, of course, is going to be opad, which is doing absolutely amazing in the market right now, up 58% yesterday, Thursday, but it is down slightly in the after hours, down 8%. But this stock has been exploding as well, and it has a similar setup to IRNT, where it's undergoing a gamma squeeze. When it was still a SPAC, a lot of people sold call options. Implied volatility was pretty high, so this is a similar setup to, as we said earlier, IRNT. So this is also a cheaper price stock compared to IRNT. So if you want to play something like this, now would be a pretty nice time, especially since we want all the call options as much as we can to expire in the money. So really nice play right here. For the people who bought call options on this stock, they're up, as we can see, 1,000% of the day, 900% of the day, if they held yesterday. Because this stock, remember, this stock is up 58% yesterday. So it has some insane movement and insane momentum. And this is going to cause a nice squeeze tomorrow or next week once all the call options expire in the money. Nice gamma squeeze that a lot of people are anticipating. So if you want to play the stocks, buying some call options for next week or 2 weeks out would be the optimal play. Or just buying and holding shares would be an even safer play. Because remember, buying call options is pretty risky. So it's pretty much gambling, if you don't mind a risky YOLO, buying call options far out of the money for some cheap, maybe like $100 per contract would be pretty nice. So that's about it for this video. 3 squeeze stocks that you guys should be watching. Very volatile, very risky. So don't put any money that you're not willing to lose. So that's about it. Thanks for watching.